There is one trading strategy that I use every single day, and it's called the box strategy. It's stupid simple, insanely reliable, and the best part is it consistently provides trading opportunities every single day. And in today's video, I'm going to share with you exactly how to identify the box, and then I'm going to share with you real trading examples on the charts to help solidify this concept. And by the end of the video, you'll have a complete system on how to identify winning trades. Let's get into it. So in today's video, we're going to talk about the box trading strategy. And this is one of my personal favorite trading strategies and one of the first trading strategies that one of my mentors taught me over 5+ years ago. And I'm still using this strategy to this day just because of the simplicity it offers along with the trading opportunity that it provides on a day-to-day basis. I'm going to show you in today's video exactly what the box trading strategy is, how to identify the box, along with what to look for when trading the box, and then of course I'm going to show you guys live trading examples at the end of the video. So with that being said, what is the box? The box trading strategy, and the reason why it's so good is because number one, it gives you an overall direction of the markets. So every single time you draw out the box, it's going to give you a perspective and it's going to give you a potential area of interest that you can be looking for to take trades every single day. And the great thing about the box is you don't need a bias coming into market open. You can trade the box to the upside. You can trade the box rejection and look for a continuation downside. There's really no need to come in the markets with a bias, because once you mark out the box levels, then you're going to be waiting for the reaction off the box. And as I mentioned, that's going to give you the overall direction for the day. Number two, it gives you multiple trading opportunities. You don't have to be long or short biased, because once you draw out that box, you can be looking for upside, you can be looking for downside. There's plenty of different trading opportunities that come when you draw out the box. And then finally, it helps position you in low risk, high reward opportunities. The reason being is because we're focusing on the key levels of the markets, so it doesn't take us a lot to understand if we're right or wrong on an opportunity. And if we're right, we can capture that opportunity and ride it towards the upside or downside. And if we're wrong, ultimately we can cut our positions for very minimal risk. So with that being said, let's go on to exactly how to identify the box. So as you can see right here, what we have is a daily chart. In the most simplest way to break down what the box trading strategy is all we're doing is boxing in our previous day highs and boxing in our previous day lows. Once we have drawn out this box, these are going to be the key areas that we're going to be looking for price to react off of. So as you can see right here, we're on the daily time frame, and a lot of the times you can draw out the box on the daily chart, the 1 hour or 15 minute. I'm going to show you guys a lot of chart examples here in a second, but all we're doing is drawing out an area of price. So preferably we're going to mark out the wick to the body, and we can draw this area out as a box, and we can extend it over. We can be using these areas as resistance or potential support depending on where we're at. And the same thing to the downside. If we're marking out the box to the downside, we're really going to be marking out from the wick to the body, and we're going to be marking this area out in price, and we're going to be using this for key levels, right? Potential bounces off key levels of support, or if price got underneath your key levels, we'd be looking for continuation lower. So as you can see right here, there's so many candles on a chart. When you pull up a chart, it doesn't matter if you're on the 1 minute, the 5 minute, the 15 minute, you'll most likely see plenty of candles throughout the day. So as you can see right here, we have bullish candles, we have bearish candles, we have more bullish candles, we have hammer stick candles, we have a nice trend towards the upside, we then have a reversal. There's so many different candlesticks on a chart, and as a beginner trader, you might be a little bit confused on what to focus on since there's so many charts, different time frames. And what you want to do is really focus on what actually matters. And what is that? In this case, instead of focusing on the full range, so instead of focusing on every single candle within the full range of the markets, what we want to do here is focus in on the top and bottom of the ranges. So as you can see here, what we want to do is mark out the top of the range, and we also want to mark out the bottom of the range. And what we're doing here is essentially boxing this in. We're boxing in the previous day lows, and we're also boxing in the previous day highs. And this is what's called the box strategy. The reason why we're boxing them in is, as mentioned, we're focusing on the top and bottom of the ranges, which is going to be key. What we don't want to do is really focus in on the middle of the range, especially if we're opening up in the previous day's range within the first really 15 to 30 minutes. Majority of the times, there's not going to be a clear direction in the markets. If we're outside of the range, that's a different story. But majority of the times when we're in between its previous day's range, we want to be a little bit more cautious within the first 15 to 30 minutes. So that's why we really want to be focusing on the top and bottom of the ranges, because that's where the key areas in price are. So as you can see right here, essentially what we're going to be doing is boxing in the previous day highs, and we're also going to be boxing in the previous day lows. And all we're doing, as I mentioned, is going to be looking for the reactions around these key levels. So let's say coming into market open, price is right here. If we gravitate down in towards the bottom of the range, we primarily want to be looking for longs for a reversal towards the top of the range. And similar thing, if price gravitates towards the top of the range, being now your previous day highs, we really want to be looking for shorts back towards the downside. And this is the basics of the box strategy. I'm going to talk about a few different scenarios here in a second, but as I mentioned, all we're doing is boxing in the previous day highs and boxing in the previous day lows, and we're going to be looking for the reactions that we have off these levels. And as I mentioned, what we don't want to be doing is trading in the middle of the box. This is what we call the no trade zone. So you don't want to be focusing on that. When I first started trading, I tried capturing every single move in the markets, trying to trade ranges, trying to trade breakouts. And where I lost the most money was specifically trading in the middle of the ranges, or essentially in no man's land, right? We don't want to be caught up in the no man's land, because that's when we're going to lose money, because there's no clear direction on the markets. Now let's go on to exactly what this looks like. So as you can see right here, what I have pulled up once again is the daily time frame. As I talked about earlier, what we can draw out is really the top of the box, which is really marking out the wick high to the body of the daily time frame, or in this case you can go onto the 1 hour time frame or 15-minute chart and mark out those key levels. I'll show you, as I mentioned, how I draw the key levels once we head onto the charts, but basically what we're doing is marking out the top of the wick to the body on the daily time frame, and we're going to extend this over. And this is what it looks like here on the 15-minute time frame. You can see buyers step in off the lows, comes up towards the top of the range, rejects, comes back down, bounces off here, another rejection. You can see there's going to be multiple touches at the top and bottom of the ranges, and this is exactly why it's key. Now let's go on to a few of the scenarios that we have. So as you can see right here, the number one scenario that we have is called the reversal. And when you're trading the box strategy, this is very common, especially if we're trading the major indices or we're trading with inside of a range. So let's say, for example, price opens up in the middle of the range. A lot of times when we come down towards the low of the box, we can see buyers stepping in. As we approach the box, or if we get underneath the box, we like to see really the buyer step in off of your box low and reverse back towards the upside. Another scenario, if price is gravitating higher, what do we like to see? We really want to see the rejection off the top of the box or anywhere around this general area. That's why it's called an area, and that's why we box it in, is because it's not going to be a specific level, it's going to be a specific area in price. So a lot of the reversals will happen at the top of the box, and a lot of the reversals will happen at the low of the box. And this specifically happens on day number 2. So after we've marked out our boxes on day number 1, then we go into day number 2 and we wait for the reactions off these key levels. So this is the number 1 scenario, which is the reversal. For me, I actually don't really like trading reversals. I like trading the next scenario, which I'm about to share with you. The next scenario that I'm about to share with you is called the continuation. So as you can see, similar thing here, what we have marked out is the box low and we have your box high. So essentially we just boxed out our previous day highs and previous day lows. So now with us being either inside the middle of the range or not, right, what we're now looking for is continuation. And when this occurs is usually a really strong push right off the bat. So let's say, for example, within the first 5 to 10 minutes, the market has a huge rally and now we're above our previous day's highs. Once we get that impulsive move, now we're going to be looking for the retest for continuation back towards the upside. For the downside, it's the exact same thing, but the opposite. What we're doing here is looking for an impulsive move lower, preferably within the first 15 to 30 minutes of market open. We're now looking for the retest of, now it's going to be that previous day low for that continue push towards the downside. So as you can see here, this is what's called the continuation. So we're looking for continuation above our previous day highs or below our previous day lows. And this is one of my personal favorites because I like trading momentum and I like trading continuations with trends compared to trading reversals, which are more mean reversions. So So now let's hop onto the chart to see what this looks like, and then we'll go into some examples for us today. So before I head on to the trading view charts, I just want to give a quick glimpse on exactly on what the box strategy looks like. So as you can see right here, we have essentially day number one. This is what we're going to call it. And what we're going to do is box in our previous day lows, and we're also going to box in our previous day highs. The easiest way to draw out these levels, as I mentioned, is from the wick to the body. You can do this on the 1 hour time frame. You can also do this on the 15-minute time frame. These are my favorite time frames to draw out these levels. When you're on the daily chart, sometimes there's too big of zones, so you want better refinement, especially for day trading on the 1 and 5 minute charts. So what we're going to do, as I mentioned, is we're going to draw these zones. And now, as you can see on the next day, we actually open up in the middle of the range. So we open up in the middle of the range. As I mentioned, this is really for us a no trade zone. Specifically, right, when we have the box high, box low, we're opening up in the middle of the range. There's no clear direction on the markets. We want to be a little bit more cautious. But what we can do in this case is extend our zones over. So as you can see, this is our previous day lows. We can extend that zone over into the next day. We can extend our zone high into the next day here as well. And now you can actually see price consolidates for that first really 1 hour of market open. And as it gravitates down and towards where? The box low. So we gravitate down and towards that previous day lows. And you can see the buyers step in very nicely. And we have a reversal in the overall markets. This right here can be a trading opportunity for price to push back higher. Similar thing. We can go on to the next day, which is now going to be day number 3. We can extend our zone once again. And the great thing about trading these zones is you can refine your zones every single day. You'd want to trade the zone with the most highest probability, which generally means where you have the most touches. So you can refine your zones. They don't always have to be perfect, but you really want areas where you have multiple touches in the market. We can draw the zone low. As you can see here, once again, we go from really the top of the level, sharp rejection right off the bat. And where do we gravitate towards? We actually gravitate down and towards the range low. And you can see exactly where the buyer stepped in for a reversal once again. So you can see right here how many trading opportunities we would have had off these levels, right? Day number 2, nice reversal setup. Day number 3, reversal right off the bat, and then came into Roger range low, another reversal, which is another opportunity. And now we can go on to day number 4, and we can extend our zones once again. And as you can see right here, what happened coming into day number 4? We actually show weakness. We finally break outside the zone. And what happens? We actually end up using this level as a perfect retest. You can see this level of support, which happened to be day 2, day 3, and also day 1's lows end up turning into support, end up turning into resistance here on day number 4. You can see sharp rejection and then continuation towards the downside, which could have gave you another opportunity in the markets. So this is exactly how to draw the box. And as I mentioned, these are levels that we can use on a day-to-day basis. We can be trading continuations. We can be trading reversals. There's so many different trading opportunities that come off these areas of price. And these are really the key areas that you should be marking out on your chart every single day. So with that being said, now let's hop onto the charts to see exactly what this looks like in real time. So as you can see right here, we have the QQQ chart pulled up. And as I mentioned, I like drawing these levels on the 15-minute or the 1 hour time frame. So coming into market open right here, this is a Friday. So coming into Monday morning, the levels that we want to have marked out, as I mentioned, is we want to box in our previous day highs along with our previous day lows. So if we were to mark out these levels, as you can see, we're on currently the 15-minute time frame. What I'm going to draw is, as I mentioned, from the wick to the body. And if I zoom in here just a little bit, you can see that we have a very small zone. It's just going from the previous day high down into the body. And if I was to mark out the zone on the bottom, it's a little bit bigger. As you can see, this general area, I can mark it out from the wick all the way up to this body. So this is a little bit of a bigger zone. And as you can see right here, if I look back left just a little bit, you can see how well these zones are respected. You can see the week earlier, this previous level of support turned into resistance. And you can see on Friday, another key level of resistance, which ended up pushing price back towards the downside. So as you can see right here, these are the zones that we have created here on the 15-minute time frame. And as you can see, I just switched over to the 1 hour time frame. And if I were to draw out these levels, you can see this is the exact same level I would have drawn on the 15-minute time frame. If I was to draw out the upside, I might extend this zone all the way to this body, where you can see, right, we have a touch here, another touch, multiple touches around this general area. And if I go back onto the 15-minute time frame now, you can see this zone I actually like a little bit better just because it gives us a little bit more breathing room, where you can see this previous pivot point turn into support here, multiple touches on this day, end up turning into rejection, another reject on Friday. So coming into Monday morning, what are the scenarios that we will be looking for? So currently the key level that we have boxed in is the previous day highs. So based off of the reversal and continuation setup, there's really only two scenarios since we're very far away from the bottom of the zone. So we don't really expect price to come all the way back down in towards that 582. But since we're closer to the top of the zone, what we're going to be doing is looking for number one, either the rejection off of your previous day highs for a potential reversal back towards the downside. This is a scenario that can play out, which is the reversal setup, or price can get above your previous day highs 598, retest, we can see this nice continuation higher. So coming into market open, we really only have two scenarios, one a reversal setup, one a continuation setup, and now we're just waiting for the price action around these key levels. So now let's go into lower time frames coming into market open. So you can see I sped up the tape here on the 15-minute time frame. We end up having this nice break and retest here on the higher time frames. If you go into the lower time frames, you can see it's a little bit more clear, right? We end up having this really strong push within the first 5 minutes of market opening, indicating that we're going to have a nice potential trend towards the upside to start off the day. And now you can see we end up coming back for that perfect retest right off of our previous day highs in this general area that we marked out for this nice continued push higher. And if we keep playing out the tape, let's keep marking out brand new levels. So now I have the tape speeded up coming into the next day. We have our box that we marked out towards the downside. Now we can add in a fresh new level, which is going to be from the body, as I mentioned, to the wick. And this can be the level that we're going to be using for the upside. So we boxed in our previous day highs. We essentially have our boxed in our previous day lows, which also coincides with our Friday's highs and Monday's lows as well. So coming into market open here on the QQQ, we're about to open up fairly close to the middle of the range. So now coming into this day, we have a couple more scenarios that we could be looking for. Number one scenario, break above your previous day highs, continuation towards upside. Another possible long scenario is the bounce all the way off of our 597 key area for this continuation higher. If we want to see a potential reversal in the market or downside, previous day high rejection for continuation lower, or if price came all the way back down underneath this 597, we can be looking for continuation lower. But now let's speed up the tape. And as you can see right here, I have the tape speeded up just a little bit. You can see price actually came back down right in towards our key level, which was that range low, which also happened to be our Monday's lows and our Friday's highs. Perfect rejection right off our key levels. If you go into the lower time frames, you can see buyers stepped in here perfectly. And now we push price all the way back towards the upside. And as I speed up the tape here, you can see once we broke above your previous day highs, we end up having a nice retest for a continuation once again. And you can see on the lower time frames, look at how well these levels are respected and how many different trading opportunities can be formed just off of these key areas in price. And this is exactly why these levels are so important. Just basing off of your previous key highs and lows and boxing in those areas in price can allow you to have multiple trading opportunities, and you can also see how well price respects these key levels. You can go and back test this yourself. You don't have to take my word for it. Go back, go into the charts, box in your previous day highs and lows, mark out these key levels on the 15-minute and 1 hour time frame, and you'll see how well these levels are respected. It works in any asset class. I primarily do this on the indices along with stocks as well. It also works on other asset classes as well. Now with this being said, let's go into some real examples that I took in real time using the box strategy. So right here, we're currently on my next example, which is on AMD. And right now we're on the 15-minute time frame. And just looking at the past previous session here, what we can determine is that this is going to be our key general area of price. But as you can see, we actually have a pretty big zone. If we were to mark this out from its low that we created here from Friday all the way to its Monday's levels, in this case, this is a very big zone in the markets. It's going to be hard to get really precise entries on the lower time frame, specifically the 1 and 5 minute time frame, if a zone like this is so big on the 15-minute and 1 hour time frame. So you can actually just divide the zones up. So in this case, if we were to box in our previous day lows, you can mark out this general area, which is just going to be from this wick all the way to this body. If I want to box out the previous day highs, we can do the same thing. Of course, since we're fairly bearish, this previous day high zone isn't going to be as valid. If I was to look left just a little bit once again, you can actually see this area is respected fairly nicely. You can see multiple touches off your 238. You have a big wick wicking through this zone, another wick all the way back from November the 11th. If you want to find another zone as well, potentially you can mark out even this zone right here, which is going to be from your Friday's highs from the week previous all the way to this low here as well. And this can be used as a zone. So there's really two zones here for AMD. We can mark out our 238. We can also mark out our 235. Depending on the reaction that we have off these key levels, they can be both used as key potential areas where price can bounce off of. So coming into market open, there will be a couple scenarios that we'll be looking for. Number one will be the short off our 238 for this continuation lower, which is just your previous day lows. Another possible scenario is the break underneath this 235, which just happens to be the low that we created here from Friday. Also another higher time frame key level here as well for continuation towards the downside. For upside, there's really only one scenario here, which would be the reclaim reversal trade once we reclaim back above your previous day lows. But now let's go into the lower time frames to play with the tape. So as you can see right here on AMD coming into market open, we're getting that super strong rejection right off the bat, right off of your previous day lows. This would be a very aggressive entry. You can see that really occurred within the first couple of minutes of market open. If you don't want to be that aggressive, you can either wait for confirmation or you can wait for the tape to develop a little bit more. Let's keep playing with the tape. And as you can see right here for AMD, we're now actually getting that break underneath that 235 we talked about. So as you can see here, we get that push up, we come down, we retest this level very, very nicely. This is where you can see the seller step in. You can see these upper wicks here, another rejection candle once again off that 235. This is a very solid entry for continuation lower. You can have your stop just a break above. You can enter in on this candle. You can enter in on this candle. You can even enter in on the formation of this candle right here. There's plenty of different entry models. All you have to understand is that AMD is indeed bearish on the higher time frames. In this case, we're just going to make it nice and easy. Fixed 1-to-2 risk to reward ratio towards the downside, with our stop loss just a break above this candle high and our take profit at a fixed 1-to-2. Now let's play out the tape. And as you can see right there for AMD, we end up having a super solid push towards the downside here, right off of our key levels. There's two entries. You could have entered in off your previous day lows, or you could have entered in off that 235, which was the low that we created for Friday. So you can see plenty of levels. We're just boxing in our previous day highs and previous day lows, extending them over. And you can see how well these areas are respected. Now let's go on to the final example that we have for us today. All right, as you can see right here, we're on my final example, and this is on NVIDIA. Once again, we're on the 15-minute time frame, and what we're going to do is just box in our key levels. So coming into this day right here, which is a Thursday, what I can do is box in our previous day lows. I can just draw it out from this wick to the body. You can see a couple touches here, a couple touches in the pre-market the day before. If I want to mark out the upside, I can box in our previous day highs. These are levels we can be used, and then even potentially if we want to mark out the low from the day before, we can mark it out from this wick, right? You can extend it to this body if you'd like, or you can just draw this zone down in towards your previous day lows. So there's actually a few different ways you can draw these zones. I personally like it where you have multiple touches. So a good rule of thumb is drawing it from the wick to the body, but sometimes if you have multiple touches, right, you can just draw it out from your low that we created here down in towards this low. You can just draw this zone. Either way, both these zones will be respected, and you can use both these zones as potential trading opportunities. So let's say coming into market open, really the only levels we want to focus on is your 203 along with this 195. Potentially we could be using this zone here as well, but just understand, as I mentioned earlier, that we primarily don't want to be trading in the zone. If we trade in between here, it's just going to be a little bit more difficult within the first 15 to 30 minutes unless we have some sort of complete rejection right off the bat. That would be the only short scenario I'd be interested in, because a long scenario, just based off of the higher time frames, we're in a downtrend, it would be a little bit harder to look for a long trade off the reclaim above that 198. So coming into today here for NVIDIA, I'm really looking for two scenarios, primarily towards the downside, pop and fade off this 198, or getting underneath that previous day lows for that continuation lower. The only long setup I would be somewhat interested in would either be the reclaim or potentially the bounce off that previous day low, that 195. Let's play out the tape coming to market open. So as you can see here, I have the first 20 minutes played out on the overall markets, and so far we're staying heavy here. So now what we like to see, as I mentioned, is the break underneath for continuation lower or the potential bounce play. Let's go into the 1 minute time frame. So as you can see right here for NVIDIA, overall, we're staying heavy. Lower highs are being built. We're now breaking underneath your previous day lows with a strong push towards the downside. All we're doing now is looking for the retest for a continuation towards the downside here. As you can see here for NVIDIA, we're getting that retest here. This is where I went in short off this immediate retest, right? Sellers are staying heavy, right? When I like to look for short positions, I like to be a little bit more aggressive. Stop is just a break above, and I'm looking for continuation towards the downside. Now let's play out the tape. And as you can see right there for NVIDIA, we end up getting that super solid previous day lows rejection off of this key general area. And we end up having this solid continuation towards the downside. In this case, NVIDIA even had a bigger push lower for a super solid trade on the day. But as you can see right there, that is exactly how I box in the previous day highs and the previous day lows. This is one of my favorite strategies that I use on a daily basis. If you guys join my pre-market preps, you guys know I box in these levels every single morning. And this is exactly how I personally trade on a day-to-day basis. So with that being said, I hope you guys did enjoy the video. If you did, appreciate if you guys drop a like and sub. And I'll see you guys all next week for a brand new video. Peace.